Hey, what's going on, everybody? Welcome back to another video. Today we have some stuff on Elon Musk. We have some stuff about Ripple claiming to be exploring DeFi, some XRP involvement with that as well. We also have Jamie Dimon's warning for the US economy and Peter Brandt predicting a shakeout to potentially push Bitcoin down to the $7,000 region. We also have some other stuff. We'll get into that as we go. If you guys could give this video a like so more people see it, we start to spread this video, get more people on it, that would be much appreciated. With that said, let's start here. So Elon Musk sees Dogecoin standard future. Doge price rises 14% supposedly. Guys, obviously, I hope it's obvious. I think this is a joke, right? I don't think Elon Musk really believes this is the future. But the fact that it pumped, did it pump because Elon Musk said this? Maybe. It also could have been, a great timing, but hard to say. Anyways, Elon Musk tweeted this out: Dogecoin standard and the global financial system, and basically Dogecoin taking it over by storm, saying it's inevitable. I don't know. I'm seeing it as a joke, but apparently people actually bought into this, and we pumped up about 14%. So here's the Dogecoin against Tether chart. So I thought that was funny, so I just want to include that. Anyways, guys, on a more serious note, if you haven't seen this, you got to check this out. Especially pay very close attention to the end here. They talk about a gold-backed currency that could be backed by digital asset. I'm just going to play this for you guys real quick and let me know what you think.
With central bank stimulus weakening the dollar and gold being only about $100 short of its all-time high, a question has started to arise: can gold replace the US dollar as the world's reserve currency? The dollar has enjoyed this status for decades, but since it detached itself from the gold standard in 1971, it's essentially consistently weakened on a macro level. Confidence in the U.S. government and the political system in the U.S. is one of the keys, and gold doesn't have that issue of a loss of confidence. But what it does have is a problem with transportability. That's why it's more likely that a currency backed in gold, or even a digital asset backed in physical gold, could potentially replace the dollar much more easily than the actual physical bar of gold could.
Can you guys believe that, just in case? So if you guys didn't catch that, a digital asset backed in physical gold. Can you believe it? The fact that they are actually educating the public over the fact that the dollar is losing purchasing power. Could we go back to a gold standard? Guys, this stuff was just not seen on TV before. The public was completely left dumb on this. So the fact they are educating, making videos like this. So just the fact that they are actually putting out educational style videos like this, showing this, it's for a reason. They don't do these things for no reason. They only educate you on things that they want you to be educated on about. So the fact that they're actually showing, hey, look, the US dollar is losing purchasing power. We might need to go back to gold. We could back this gold by a digital asset. Guys, they are prepping you and they are building the narrative because we are going digital. We're going to digital currencies. We are definitely going to a gold-backed digital currency. I can't say definitely, but it certainly looks that way. I don't think, like for example, guys, I've said before, I don't think that when we do, make the switch here off this current financial system, I don't think we're going to have a reserve currency that's Libra. I don't think we're going to have a digital asset that's backed by a basket of different fiat currencies or any fiat currencies. It makes no sense. The smartest, for one, I guess, nothing the Federal Reserve does make sense. But if they actually wanted to do something that does make sense, then they would have a digital asset backed by gold. So I think that this is just, I can't really say proof, but it's kind of more confirmation that is probably the route that they are going. They are starting to teach you. They are starting to educate you. They are putting out the narrative, getting it into your brain, because most people don't know what gold is. They know what gold is, but they don't know anything about, the investment of it, the value of it, the fact that we used to be on it as a gold-backed currency. You just go to the street and start talking with random people, and you will find that they don't know anything. I guess one of the best examples I can give is if you ask somebody what money is, they'll tell you US dollars, right? Oh, well, this dollar is money, when obviously the dollar is not money. The dollar is currency. So people are they just really don't know what they're holding. They don't know what money is. They don't know what currency is. They don't know how it works. They don't know how to accumulate it. They don't know anything about passive income. They're basically very financially illiterate. Anyways, that has me extremely bullish that they're actually starting to come out and put out education on topics like this. Look for more of this stuff to come out as we go. Look for more articles, more news, basically portraying, going back to gold or backing something by gold, having more sound money. Just keep looking for these types of things. This coming out is just, another piece added to the giant stack that we have. Anyways, let's jump into this. Ripple says it's exploring DeFi. Here's how XRP could join the hottest craze in crypto. So David Schwartz says the San Fran startup is exploring whether it should offer DeFi services to its institutional partners. The CTO, who is one of the original architects of the XRP ledger, says he hopes RippleNet can be a one-stop shop and the first choice for institutions hoping to make many different types of payments. The company is also well structured to start offering new services, according to Schwartz. He says, we're also looking into offering other services through RippleNet, things like loans, or maybe even if DeFi grows, offering DeFi services to institutional partners. One of the unique things that Ripple has is we have our software in the transaction flow of these financial institutions and banks. So get this, guys. He says we can develop some new products or services, or even something that comes from the DeFi space, and we can offer it immediately right into the transaction flow of these institutions. Basically saying, once these institutions are on and they're running on RippleNet and they're running on everything that they have, they could just implement things and they're going to run right on that same line. Basically, very easy implementation. So Schwartz comments aren't the first indication of Ripple's interest in DeFi. Last year, the company announced it had acquired Logos, a turnkey payment startup, to lead an ongoing initiative to explore a decentralized financial system that will leverage XRP at its core. So guys, again, 1 or 2 weeks ago, everybody's talking about, Ripple's stepping back. They're separating themselves from XRP. And now here we have, they're going to leverage XRP at its core. So, go through the FUD, do your own research. Ripple has also posted job advertisements that hint at the company's interest in building a next generation trading platform. Ripple wants to integrate the platform into its XRP powered cross-border payment solution, ODL. Whether such a platform will involve DeFi remains to be seen. So guys, Ripple's a company, and whether they do DeFi or not is going to depend if there's market demand for it. I'm not necessarily getting more bullish because they're going to be doing DeFi, but if it's something that banks wanted, or their clients wanted for that matter, whether it's banks or anybody else, if they want it, the market demand is there, then yeah, it's bullish. And that's basically what they're saying, that if the market demand is there, they'll do it. And so far, guys, it looks like the market demand is going to be there. And the article we're going to read with Jamie Dimon is going to reinforce that probably tenfold. That article has some interesting stuff. I honestly can't wait to get into it. If you guys like daily cryptocurrency videos like the one provided for you right now, we cover Bitcoin, altcoins, and everything going on in the crypto space to keep you informed and in the loop. Make sure you subscribe. And if you guys could drop this video a like so more people see it, I do appreciate any support that you choose to give to the channel. With that said, our prices for today, we have Bitcoin at 9,100, Ethereum at 234, XRP at 19 cents, Bcash at 225, ADA at 12 cents, Link at 816. We have Tezos at 305, Stellar at 10 cents, VeChain at 1.8 cents. Our fear and greed index is sitting right now at 44, and let's jump into Jamie Dimon's warning for the U.S. economy. Nobody knows what comes next. So the key points in this, the range of outcomes for the economy in the second half is incredibly wide. JP Morgan Chase sees no fewer than 5 different paths it can take. The bank has gotten more pessimistic, seeing unemployment in its default base scenario hitting nearly 11% by the end of this year. In a worst case scenario where the virus surges further in the fall, forcing another round of widespread shutdowns, unemployment could peak at roughly 23%. The word unprecedented is rarely used properly. Okay, we're going to actually get into that. So let's start here. The word unprecedented is rarely used properly, Dimon said this week after JP Morgan reported second quarter earnings. This time, it's being used properly. It's unprecedented what's going on around the world, and obviously COVID itself is a main attribute. He says in a normal recession, unemployment goes up, delinquencies go up, charge-offs go up, home prices go down. None of that is true here, though. Savings are up, incomes are up, home prices are up, so you'll see the effect of this recession. You're just not going to see it right away because of all of the stimulus. So basically saying, we can't hold off forever. We might not see it right now because of stimulus, but eventually you are going to see the effects, and those effects can come in rising costs of food, rising costs of commodities, rising costs of basically everything, right? Like your $20 bag of rice at the store, after all this money printing, it could be $30 or $40. Who really knows how much the economy will overinflate, possibly hyperinflate after this? We really don't know what exactly is going to happen. Nobody does. But one thing that we do know is every time countries that run on fiat currencies that are not backed by anything, and they start printing up and printing up and printing up, it is a slippery, fast slope down to the bottom. So get this, guys. JP Morgan sees no fewer than 5 different paths the economy can take. The firm has gotten more pessimistic, seeing unemployment in its default base scenario hitting nearly 11% by the end of this year, 4.3% worse than when it made the same forecast in April. In a worst case scenario where the virus surges further in the fall, forcing another round of widespread shutdowns, unemployment could peak at roughly 23%. Now get this. JP Morgan could be forced to cut its 90-cent quarterly dividend to preserve capital. So they're going to take the dividends away from their investors in a dire scenario. They're basically telling you that is what they're going to do. It wouldn't surprise me if JP Morgan did this, because they're literally telling you. So now when investors, a lot of investors invest in dividend companies for the dividends. Some people live off of them, some people retire off of them, and some people just want to keep compounding their gains. But when they take away their dividends, a lot of those investors who are only in that company because of the dividends, where are they going to go? Are they going to continue to stay with JP Morgan, who's now not paying them a dividend? Are they going to go somewhere else? What if other publicly traded companies decide to not issue dividends anymore? Maybe they will go over to DeFi. Right, guys? This is what I was talking about. Maybe they're just going to switch over to DeFi. Maybe they're just going to start staking ADA, or maybe Link staking comes on. They'll start staking Link, where it's decentralized and they get their payments no matter what. There is no, public company that can just decide to stop paying dividends, right? Because these companies, no company on the stock market, as far as I know, is decentralized. So he says, if you look at the base case, an adverse case, an extremely adverse case, they're all possible, and we're just guessing at the probabilities of those things. That's all we're doing, he said. You're going to have a much murkier economic environment going forward than you had in May and June, and you have to be prepared for that. We simply don't know, and by the way, we're wasting time guessing. So that is what Dimon says. Now let's go into what Peter Brandt says about Bitcoin and the possible shakeout that we could see in Bitcoin. Now, I just want to go into mainly what he says. So he starts off saying, I'm always trying to think to myself, what's the easiest play? What's the easiest thing to believe? I think the easiest thing to believe by the noobs is I'm just going to own Bitcoin here, and it's great to buy, and we're going to the moon, and there's no risk to own here, and I'll buy it here, and it will be at $1 million before you know it. Markets don't make it that easy. Markets always show some curveballs in there, and I think it's too easy to think Bitcoin needs to be owned here, and it's just a matter of days or weeks before we have an upside price explosion. So I'm trying to figure out, where's this surprise coming from? And I think personally the surprise is that we see a shakeout in Bitcoin. This is not a prediction, but I'm trying to think through the market psychology, which is we have a sharp break in Bitcoin, maybe back to 7,000 to 7,500. Now, if you guys have been watching my videos, I'm under the same mentality here. I just think that there's too many people buying here. There's too many people buying here. We know the markets are manipulated, and I think a lot of new money is entering this space right now at these price levels, and it would make sense to shake some people out one last time. And I know, everyone keeps saying, oh, this is the final dip, the final dip, the final dip. And the reality is, guys, is that there is no final dip. We're going to have dips all the way up to our all-time high. Now you can keep accumulating these dips and buying these dips, but there's no such thing as the final dip. We could see a dip down to 7,000, come up to 12, and then dip again down to 10,000, go up to 15,000, and then dip back down again to 13,000. There is no such thing as the final dip. You're going to see dips along the way. So if we do dip to 7,000 or 7,500 or even 6,000, or even if we dipped it back down to 5,000, It's fine. It's normal. In the end, we're still going to the same place. All this stuff in the middle is just trying to get retail out of their investments. They're trying to make you guys sell, and most importantly, they're trying to make you guys sell at low prices. Because what happens every time Bitcoin drops down to these ridiculously low prices, like $3,000? What happens? All of retail is selling. Everybody's scaring. Everybody's leaving crypto, and the whales and the smart money are buying your bags for the cheap. So just stop. You got to stop making the same mistakes. If you've been selling crypto every time it goes down because you get emotional, you have to learn to stop making the same mistakes. So Peter Brand goes on to say that's going to try people's patience. We're 31 months away from the high now. It's been 31 months since Bitcoin topped, and now it's enough to wear people out. If we get a shakeout here, I think we shake the tree, and we probably get rid of all the folks that were talking about going to the moon in December of 2017. They're going to finally give up the ship. Once the shakeout is complete, there will be nothing standing in the way of the 12K mark. However, Brant does not expect a long-term upward trend until mid-September at the earliest. So guys, what do you think about that? Do you think we're probably going to have a shakeout back down to around the $7,000 level, or do you think it's moon here and you are going all in? Let me know in the comments below. There is no correct answer. Again, none of us know what's going to happen. It's only speculation. So let me know your speculative thoughts down below, and everybody can check the comments and see everybody's opinions, because that's how we can really, form some better opinions by sharing things. If I share what I think and you share what you think, and we kind of play off each other's ideas, we could have a more well-rounded, better look at the markets and what may happen. It's easier to not be caught off guard when we can all share different perspectives. If you guys liked the video, make sure you subscribe. Make sure you also drop it a like. That would help out a ton, and I do appreciate it. And with that said, hope you guys did enjoy the video, and I will see you all on the next one. Have a great day, everybody.